All right, good afternoon. So Bank of Canada decided to hold the interest rate this morning. This would have been a shock to some people, wouldn't have been a shock to a lot of people. Me personally, I had no idea what they're going to do, so I didn't talk about this very much. And it was very confusing rate meeting in my opinion, because we had, higher inflation for February and then lower inflation for March and tariffs and all these things. So this one was very, very difficult to predict, but inevitably they did hold the interest rate. So headline news, Bank of Canada holds key interest rate at 2.75% in close call decision amid tariff uncertainty. And you guys know my opinion. I've always thought that interest rates would come down hard and fast, and they did. That being said, I thought they'd come down even harder and even faster, right? So basically, Tiff Macklem said central bankers considered cutting the policy rate by 0.25 percentage points, but ultimately decided against it as they seek more clarity on the future of U.S. trade policy and its impacts. We still do not know what tariffs will be imposed, whether they'll be reduced or escalated, or how long all of this will last. Now, they've already reduced their interest rates from a 5% peak in June, lowering it by 225 basis points more than any other G7 central bank. So I would still say that's, pretty hard and pretty fast. We are prepared to act decisively if incoming information points clearly in one direction. I'm going to talk about this in a little bit. The message here is we've got to be flexible and adaptable. So the market's pricing for a cut in June jumped today with about a 50 basis point in cuts expected over the remainder of 2025. This makes sense to us. Canada may have received a lower effective tariff rate than other countries, but the damage has already been done. So in my opinion, the way that I was looking at the Bank of Canada and the way that they were looking at this is they had, one of two options. Either you try to front run the bad data that's pretty much inevitably coming at this point, and you cut rates today in anticipation of that data coming. Or option two, you wait until the bad data is here and then you cut the rates, right? And it seems like they're going with option two. And I still think that they are going to cut the rates. And the reason why is because that bad data is coming. With every single thing that's going on right now, I just don't see any way how where their hand isn't forced and they have to eventually use this tool. And some people will argue and say, well, inflation, what if inflation's at like 3%? What if inflation's at 4%? They're not going to cut. They might have to raise rates, blah, blah, blah. There's a stat out there. Actually, I pulled it up right here. So over the last 120 years, 98% of all countries where sovereign debt hits 130% of GDP ended up defaulting on their debt. Do you think the US will eventually default on their debt? So this is talking about the US, but if we look at Canada's at 107% apparently. We were as high as 118%. So, we are also getting up there for debt to I think it's higher than this. For some reason, I thought it was higher than this, but apparently it's only 107%. Point that I'm making here is that if you go back in history and you look at pretty much every country or sovereign nation or whatever who eventually defaulted on their debt, they all chose inflation. Pretty much all of them have chose inflation. Like there's two ways that you can default on your debt. And one of them is economic collapse. The other one is inflation, right? But if you still have tools available to prevent the collapse, you're going to use them, right? And one of those tools is interest rates. Even if inflation is at 3% and we shouldn't be lowering the interest rates, but we're heading towards impending doom, I think they're still going to cut the interest rates, right? Because they got to do something. They have to use the tools that are available to try to prevent that from happening, right? And we don't know when that collapse is going to be. I think it's inevitable just because we use a fiat currency in a debt-based economy, right? But that could be 40 years from now. It could be 2 years from now. It could be 50 years from now. It could be 60 years from now. And I think they will continue to choose inflation until the very last moment where inflation is no longer an option. And that being the case, I still think that they are going to have to cut interest rates. And if you look at what's happening, like when I'm talking about front running the data, like just look at what's happening in Toronto's pre-construction market right now. Slowest condo market in over 30 years, causing construction to collapse, right? Which is also going to mean higher unemployment. And then you stack tariffs on top of that and everything else, right? So the Greater Toronto Hamilton area new condo market reported a total of 533 sales in quarter one 2025, declining 62% year over year from a year last year that already really sucked, and 88% below the 10-year average, to reach the lowest quarterly total since 1995. The 215 new condo sales in the city of Toronto in quarter one fell to its lowest level since 1990, 35 years. Only 2 projects launched for pre-sales in quarter one, totaling 275 units. Since the beginning of 2024, 28 projects launched, totaling 5,700 units. 28 pre-sale projects launched, totaling 5,700 units, were either put on hold, canceled, placed in receivership, or converted to purpose-built rental. Unsold new condominium inventory totaled 24,000 units, increasing 6% from a year ago and 58% higher than the 10-year average. Unsold inventory was equal to 78 months of supply. So just for context, anything under 3 months is a seller's market, and they're at 80 months. Unsold inventory is made up of 11,000 units unsold in pre-construction projects, 11,000 unsold units under construction in construction projects, and 1,900 unsold units of standing inventory in completed projects. So now we look at this quarterly GTHA new condo apartment sales. Sorry, freaking tired today. Like it literally looks like it's going to zero, right? Like it was at pretty much zero in 1990 and 1991, and it looks like it's going to literally zero. So this is, in my opinion, going to cause a contagion of falling rents and these problems spreading out, and all these people that are losing money in these pre-construction units will have to liquidate other assets and other properties that they own in other provinces and other places in Ontario to cover the losses that are being suffered within this sector of the economy. So this is probably going to spread throughout the economy. And when we talk about bad data, like this is some pretty bad data, and it won't be very long before we start to see the unemployment from this, bigger losses, prices dropping in real estate, all these things that can come from specifically this situation right now. A lot of that data is going to start to materialize most likely in the next, before the end of the year, I would say. And again, that's just a guess, but there is a lot of condominium completions coming in 2025. So you'll start to see the effects of all of those completions and non-completions start to materialize pretty soon here. And then also when construction workers complete these projects that are completing in 2025, they may not have another one to go to, and that causes unemployment to rise. Hey, listen, there's a lot going on in Canada right now, and I am noticing that mental health is becoming a big issue here. And that's why I decided to partner with Focus Forward. So Focus Forward is a local counseling company out here in Abbotsford. They will help you with anxiety, trauma, depression, and all sorts of things. And although they're located locally, they can help anybody in BC virtually. And listen, they're covered through most extended medical benefits. So if you're working a job where you have that, you may just get your entire fee covered through those benefits. So I'm going to drop their information right here at the bottom of the screen. And if this is something that you feel you're struggling with, feel free to reach out. Let's get back to the video. So although we got a rate hold today, my opinion remains the same. A lot of people talking about stagflation and all these things. And, I agree that that can definitely happen, right? Like that's for sure in the cards. I think regardless of what happens, they're going to have to cut rates because stuff like this is happening in the background right now. But again, I'm just a realtor, dude. I'm not an economist, right? This is just an opinion from somebody who doesn't have a very in-depth level of knowledge into these things. I've studied in the past. I've looked at what happened in 2008, and I spend all day researching this stuff. Like this is what I do for fun. But again, I'm not an economist. But if you enjoyed this video, make sure you like and comment. If you want to chat with me about buying or selling in the Fraser Valley, make sure you book a time to chat with me using the link below. Otherwise, appreciate you for being here. I'm that Agent Kelly. I'm making moves to move you. Peace.